Yeah, so today what we saw was a normal auction by CBN. CBN is conducting a normal auction to mop 130 billion from the system, which is due to the shortfall from yesterday's normal auction. So yesterday CBN offered about 500 billion in Homo. However, it was only able to sell about 296 billion. So is what we saw today is CBN trying to mop the excess liquidity from yesterday's maturity. So we have 20 billion from a 90-day bill, 30 from a 181-day bill, and 80 billion from a 363-day bill. So we expect the stop rate to still be maintained at 11.9, 13.5, and 15% on the short, medium, and long-term P.
But with effective rates still as high as, what, 17%?
Sure, the effective rate is still at 17% on the long end of the curve.
Okay.
So we don't expect this to change at least for this month. But however, come January, we expect the stop rate to actually go up, given the maturity of about 2.5 trillion that we have coming in January.
Can I have asked all the traders this, and I'm going to ask you this: if we do see it higher than 17, how much higher do you think this could go?
Okay, my expectation is the short end of the curve will be increased by about 10 basis points, while the medium tenor will increase by 25 basis points, and the long end of the curve, I expect a 50 basis point increase in the stop rate come January. But this month, I expect the stop rate to still be maintained at the same level. So what we have currently, out of the 2.3 trillion that is meant to mature this month, about 1.3 trillion has matured, and CBN has been able to mop about 1.5 trillion from the system. So we expect the stop rate to still be maintained.
Okay. Now, between yesterday's mop-up and today's, this morning's mop-up too, I know that overnight rates, even the OBB2 surged. We saw rates as high as 60%. Has that brought back down the interbank rates?
No, we don't expect the OBB and overnight rate to go up significantly, because the opening today, the market liquidity was about 116 billion up. So unlike what we saw on Wednesday, where the system liquidity was negative. So yesterday we still have excess liquidity of over 292 billion from yesterday's maturity. So with the 130 billion on offer today, we don't expect CBN to actually sell to mop up 130 billion from the system. So we still have some liquidity in the system. So we expect the stability in OBB and overnight rate, so maybe around 15 and 16% levels.
Okay. Now for the yield curve, do you see investors, perhaps the PFAs, fund managers, still trading at the lower end, at the short end of the curve, where they could just come in, take profit and just exit?
Yeah, so what we've seen in the fixed income market is there has been a lot of activity at the short end of the curve, which is due to sell-off by market participants to actually take advantage of the frequent promotion by the CBN. So we will still see the bearish sentiment to continue, and people are just playing at the short end of the curve, but the CBN attention has been skewed toward the long end of the curve. So we expect this trend to continue.
Okay, let's talk currency now. The Naira this morning, especially at the INE windows, but we'll also talk about, at the other segments, but for the INE window, are we seeing stability, and what rates are we seeing now?
Yes, so what we are seeing in the INE window, we are seeing improved liquidity. However, this is when you compare to what we witnessed in November. So though we have this improved liquidity, but it has come at a higher level. So we see market participants willing to offer fund at 365 level basically. So, however, CBN has continued to sustain its intervention. So on Wednesday, there was an injection. CBN intervened in the iron market, where it taxed banks to actually send in their local demand, and when CBN actually intervenes at 362, 363 level. So with that, it has actually brought some stability into that iron window. However, in the short term, we expect transaction to be executed at 365 levels.
But what about demand? Would you say that demand has eased? I know the CBN, is stepping up and ensuring that there's ample, at least enough sufficient supply. But would you say that has reduced demand?
No, we've seen a lot of increased demand from customers trying to clear their obligations. However, we've seen suppliers there, but more from the exporters and local corporate trying to convert their inflows to Naira. So we've not seen much activity from the offshore, the foreign investors.
Okay, but some final note for next week. What is your outlook for trading next week from the fixed income, T-bills up to the currency market also? Should we expect the trend we've seen this week, more aggressive mop-ups from the CBN and, of course, investors playing at the short end at the bond market?
Yeah, so my outlook for fixed income next week, there is a bond auction of 70 billion next week, and for the Sukuk bond, that will be the allotment will be on Friday next week. So we expect the rate to actually increase marginally. On the Treasury bill market, we expect market participants to still play at the long end, short end of the curve, because CBN will continue to conduct a home auction. Okay. And so for the FX, we expect stability, relative stability in the market. If you look at the parallel market, the rate has actually appreciated. It's currently at 362, 363 levels. So we expect relative stability in FX market.
Okay, Bosun, so much. Thank you so much for talking to us today.